What's going on, everyone? Charlie here. We're going to talk about ZK rollup. Now, stay with me. This stands for Zero Knowledge Rollup, and we're talking about Loopring and the Ethereum space. I'm going to start digging into this because I really am interested in this, and I think that Loopring will be something big in the near future. I'm not sure when. Not going to call any price targets or anything like that. I'm just trying to learn about the underlying object of Loopring, what it is, what it's all about, and then crypto in general. I think it's time we dive into that area. So let's go ahead and take a look at what this all means. So ZK Rollup. ZK Rollup, which ZK stands for Zero Knowledge, is a level 2 sidechain resembling Plasma, but data availability is solved by broadcasting data to Ethereum. Fraud challenges are replaced with zero knowledge proofs. Now, ZK Rollup, again, our nodes within a sidechain network are responsible for confirming and processing transactions, writing transactions to blocks, and maintaining consensus across the network. Layer 2 sidechains are distributed ledgers, which operate independently and in parallel capacity to the Ethereum mainnet. Now, problems that ZK Rollup solves. And again, LRC or Loopring is a ZK Rollup. No liveness assumption, same security as level 1, capital efficiency, censorship resistance via decentralized operators, no need for mass exits, no operational security risks. Current limitations: throughput limit of 500 TPS, which stands for transactions per second. Ethereum does 5 transactions per second. PayPal does 160 transactions per second, and more are going to be possible in the future. Now, at the time of this article being written, it was written in the summer of 2020, so we're over a full year past this, so obviously improvements have been made. Now, fixed functionality: ERC20 transfers, swaps, state channels, smart contracts possible after EIP 1829, which is what we have seen. We know now that Loopring is going to be working with smart contracts, so this is like we're reading about something that happened a year ago, or like the prediction, and we've seen it come to fruition just here recently, so pretty cool. So basically, the problem with crypto has always been the throughput, right? Or the TPS. You want to enable it for mass use, right? That's its biggest downfall. Now, zero knowledge proofs allow one party, the prover, to prove to another, the verifier, that a statement is true without revealing any information beyond the validity of the statement itself. And here's a little example right here. You have public output Y, X is the private input, and then F is a function representing some big long computation or a short computation. Now, what does all this mean? Well, you probably know the story all too well. When Bitcoin sneaked into the mainstream media back in 2017, and more people than ever became interested in the blockchain, the world saw the major challenge connected with the technology. As the platform became popular and loads of transactions were carried out on it, the network congestion reached a new, previously unseen level. This led to skyrocketing transaction fees, effectively making Bitcoin transfers impractical at that time. The problem has resurfaced recently when the gas prices on Ethereum have increased 30 to 50 times compared to the boring times back in the day when Ethereum didn't have near as much people trading it. Now, scalability. All of this demonstrates what the community had known before it happened, that the original design of the blockchain makes it unsuitable for mass use. Its maximum throughput of just a couple of transactions per second positions it nowhere close to mainstream networks such as Visa or PayPal. This limitation is often referred to as the blockchain scalability problem. Now, this is what a ZK rollup example looks like when it is true. So you have Alice and Bob over here. Alice has 3 ETH and Bob has 0. Alice gives 2 ETH to Bob, Bob being the ZK, basically the verifier, you could say. So zero knowledge proof, 2 ETH to Bob, submit transaction data to prover, generates the zero knowledge proof, and then sends the zero knowledge proof to the verifier. So you got the prover and the verifier, the ZK being the prover. Now here's an example if it were to be false. Alice has 3 ETH, Bob has 0 ETH. Alice tries to give 5 ETH to Bob, doesn't work. because you have a malicious prover here. So whenever you try to give this to the verifier, he says, nope, not going to work. That's basically how it works in layman's terms. Now let's talk about snark versus stark. Now, snark stands for the proof is significantly smaller than the data it represents and can be verified quickly. Non-interactive, only one set of information is sent by the prover to the verifier, thus there's no back and forth interaction between them. Argument of knowledge, the proof is considered computationally sound. A malicious prover isn't likely to cheat the system without processing the knowledge to support its statement. Snarks used in scalability solutions require a trusted setup between the prover and the verifier. It's a set of initial public parameters that resemble the rules of a game. They're generated during a so-called trusted setup ceremony. It's a joint computation performed in an arranged time by a group of voluntary participants. As long as at least one of them behaves honestly, the parameters are generated securely. Thus, the more parties participate, the more trusted the ceremony is. So, Loopring is a snark. We have some other examples here of the stark and the snorks. Loopring is a snark. That's all we're going to worry about now. It's basically a trusted setup. Now, starks have no trusted setup. However, because they have no trusted setup, their TPS actually is able to go higher. Their scalability is higher, but at what cost? Loopring has a trusted setup with app specific. So, again, very interesting. Now, this is where it gets interesting. So, Loopring is a ZK rollup scalability protocol developed since 2017. Just like ZK Sync, it stores users' data on-chain and leverages the snark technology. Initially, it was designed to address the needs of decentralized exchanges, but Loopring Project launched a new application meant for transfers, which is Loopring Pay, in June of the year this article was written, which was August 2020. The latest version of the protocol, Loopring 3.1, powers Loopring Exchange, the company's own DEX available in a beta version on the mainnet. Apart from trading, it allows making ETH and ERC20 token transfers, which is 741, the thing RC has been tweeting us about all year long. Ethereum ERC20 plus ETH equals 741, because ETH equals 721 and ERC20 is 20. So you add those two together, 741. Although the protocol is open sourced and Loopring project is open for partnerships with those who want to build on top of it, that is critical, is open for partnerships with those who want to build on top of it. The company focuses on developing its own products available at www.loopring.io. They're also working on a mobile version of their application. In Loopring, data is stored on-chain, but the company claims that it enables its partners to switch off the on-chain data availability. After doing so, data is stored off-chain, which makes the product function as a validium. Nonetheless, the default settings have the data availability option on, and this is how Loopring Exchange operates right now. Don't know if that's still the case as of today, but that's how it was back about a year ago. Now let's look at usability of Loopring. To send their funds to another person, the sender needs to connect their Ethereum wallet, currently MetaMask or any wallet connect compatible, and create a Loopring Exchange account. As the registration is on-chain, the time needed to do that depends on gas price and the speed of confirming Ethereum blocks. Entering funds and transferring them is easy and intuitive. The interface looks nice and and every option is easily reachable. Depositing is quick, and although it takes more time to withdraw funds, the usability of the product is quite high, which is great. That's what we want to see. So, business model. Loopring project is open for collaborating with companies that want to build on top of its open source protocol. In such cases, the customized solution comes with transaction fees established on the individual customer level. However, Loopring project focuses on developing its own products, currently a DEX featuring a payment application, and making profit from their transaction fees. Trading at Loopring Exchange is free for the maker, but for the taker is charged between 0.06% and 0.1% of the value of the order. Transfers by turn are totally free at the moment. So there you have it. GME LRC. LRC has the scalability problem being worked on. GME has a team that's being built. We know it's in the crypto space. We know it's in the Ethereum network. We know 741 is the number. We know Loopring is looking for partnerships. It's all coming together. Hold and wait. Let's go. Hope you learned something.